Um, I'm sorry I didn't post last week. The reason I didn't post was because there was a little bit of confusion. Looking at all my charts, there's a bit of confusion, and to be honest, I really didn't even know what to talk about. I just couldn't. I spent a few hours going over my charts and trying to decide what it was I was going to talk about, and I just couldn't decide. So I didn't want to do a video just for the sake of doing a video. This week, I think things were a little clearer for me in terms of my relative strength charts and also breadth charts, both short-term and intermediate term. So firstly, this week I just want to show my silver charts going back to, I've been showing these charts now for a couple of months, so I just want to go over those again. Then I'm just going to briefly go over the market and show a whole bunch of charts, both short and intermediate term breadth charts, and then some relative strength charts, just to show that I think now is not the time. I think we had our chance to buy 2 weeks ago, my last video, where I said everything was lining up perfectly for at least a short to intermediate term trade. But things at the moment, things have kind of changed slightly, and not to say that the trend is still up, both with price above the rising 30-week moving average, the 50 over the 100 on the daily, the 20 over the 40 on the weekly, and even the one EMA over the 20 EMA on the monthly. So, in terms of trend, they're all up. So I'm not suggesting the trend is down. The trend is definitely up. I just think I'll show a lot of charts to see why I think now is not a good time to buy. There's possibly a better time coming up in the next maybe week or two, and with the possibility it could turn into something more. But I don't want to be long, so I'm going to quickly go over those charts. But first, I just want to go over silver. Now, I've been showing over the last 1 or 2 months this chart, which is this is the recent move, and I was saying that it looks very similar in characteristic to the 2009 bottom in silver. Very, very similar in terms of time and price. So I just want to show you where we're at now. This is 2009. So from this high here, where I said that I thought we're possibly going to have a peak in silver here, and it peaked right in that when I said, and I showed that it's possibly going to go down to the 100 EMA in a three-wave move, which it has done. It's at it's basically stopped at the 100 EMA, so that was good. Now, I was saying that once it breaks this resistance line, that that would be a good time to buy. But we had a 2% gap over that, which is in the Asian market, which is a bit unfortunate. But we've had 3 solid days up. I think we've had, which is fine. All my volume indicators are all up. It's looking good. So, but just because I showed how similar it is to the 2009 bottom, and I was thinking possibly I showed that each of these corrections are 3-month corrections in a new bull market, which is what I think we're in, a new bull market in silver. I could be wrong, but if we are, then we're possibly looking at a complex correction similar to this that will take about 3 months in time. If it keeps going up past the high, then that's definitely not the case, and silver would definitely be a good place to be. But I'm just wondering whether in the 2009 bottom we made it back to the resistance, and then we had another complex sort of a 3-wave correction. But the 100 and the 50 never crossed again, so the trend is still up, even though it broke down below the 100 moving average. So that's where we're at now. We're kind of at that sort of place where it may possibly pull back and start a more complex correction. But I guess we'll see over the next little while. But what I do want to show is, if we have a look at the finviz.com, we have a look at the commitment of traders, where we're at now. If you have a look at the weekly chart, we've got the levels. Silver, so the commercial hedges, and they're the smart money. They're the ones that you want to basically follow, and they're net short by almost 100,000 contracts. But if we go back of silver, if we go back to the monthly chart, this is quite an extreme level. It's actually lower than any time going back right to, well, we see 1993. And if you see each time that it got down to these low levels, it was, especially if you go back to, I guess the closest levels were 2004, 5, 6, and you know, they're actually tops in the market. I mean, each time it got down to these low levels, we have tops. Okay, every time. The question is, are we in a bear market or a bull market still? Now that the trend is up at the moment on an intermediate term basis, so on that basis I say the trend is up, and I think that we're probably going to start a new longer term trend in silver. But I mean, I don't like to pick long term trends, so that's just the intermediate trend for now is up, because that's what the moving averages say. So if we're in an uptrend, this could possibly, it could stay down in these levels for quite some time. So this may not be as important. That's kind of the hard thing to work out with the commitment of traders. So it's either saying that it's a top, or that I mean, it could keep going up and this could keep bouncing down around these levels. So it's just the fact that it's as low as it is. It's lower than any of these other times, and they pick tops pretty well. So it's just something to be wary of. So I'm just going to quickly go through these charts, but first, I just want to show the stock market. Now I'm going to show all these charts to me look bearish, on a short term and possibly an intermediate term bearish. And like I said, the trend is up. So I actually took some profits this week, a few days ago, but I'm still bullish because the trend is up. But when things change, I just, as I'll show you, you got to take these charts seriously. And for me, it's just not a good time to buy right now. I'll wait and see. I think that there'll be a better time to buy, and I'll show you sort of what I look for in some of my charts. But just want to show you that the New York Stock Exchange, if you have a look at this chart here, you know, we've we've had a retrace to the 30-week moving average. We've had a new high here. I'm just talking about this. The May high. It's broken the May high, so that's quite bullish. I mean, everything's bullish there. There's nothing to suggest that the market should go down too far. So, as I said, I'm bullish. There's nothing in these charts. Here's this SPX. The SPX and the SPY actually made a new high, all-time high. So there's absolutely nothing to suggest that there's going to be a big sell-off. But I'll just show a few charts that show the potential for a little bit of a sell-off. The PMO is still rising. That's one negative thing. The volume in this sort of little buying opportunity here has been pretty light. So. And the other thing is the New York Stock Exchange that I've talked about the last few weeks is still in a column of O's, and that is bearish. I mean, the fact that it made a new high, some of these indexes, the BPI didn't turn up to X's. And it didn't even get close really. That's a bit of a worry. So this is something to definitely keep an eye on. So at the moment, still in O's. So that is, you know, the path of least resistance is down in terms of the point and figure. You got to take this chart seriously. Okay, so what I'm going to do is just go over some short-term breadth charts, just to show that we still haven't, even on a short-term basis, we haven't reached a bottom just yet in the last couple of days sell-off. Okay, so I'm not going to go over what the charts mean. I'm just going to tell you what they are and show how they're bearish or bullish. So this is the trend in the advanced decliners, and there's a moving average of them. So we're coming out of basically overbought with negative divergences. I take negative divergences pretty seriously. You show that each time this happens, we have a decent sort of an intermediate pullback. Okay, we've got the put call options ratio. We've got sell down here, buy up here. At the moment, we just came out of a sell. Okay, we're not even on a short-term basis without positive divergences. We're not there yet. So let's go on to we got a similar sort of thing here. I just do it in the chart in a little bit different way. We're just coming out of more of a sell zone that I have here. The buy zone's closer up here. It picks the bottoms pretty well, which it did here, but right now it's picking that top. So another one. So these are all short term on a daily chart. So these could be days to, whatever, a couple of weeks, a few weeks. So right now, if you look at the red circles, and this is the new 52-week highs, and we're up here in overbought condition. Okay, picks it pretty well. You want to start buying down on these lower levels where the blue circles. At the moment, it's definitely not a big place to be buying. Same here. We've got new highs, new lows. We're right up here in the nosebleed section with the red circles. You want to be buying when these major sell-offs here, which we're not at yet. And we also have the trend, and it's again, we got negative divergences, and we're not in the buy zone just yet. Let's keep going. We've got the McClellan oscillator and the McClellan, the Nazi, and we've got these big negative divergences, which again, when they happen at tops in high levels, then you've got to take them seriously. We're not down at the buy zone yet. They pick bottoms really well, but right now we're not down in the buy zone. Same with the new high-low ratio. We're up here in the overbought section with negative divergences. Okay. Where are we? Okay, this is the percentage of stocks above the 50-day moving average, and right now we've come out of overbought, and we've got negative divergences. Okay, so you can see some of the sell-offs after these negative divergences and out of the overbought. So now we've got the McClellan again, and we've got negative divergences. I think I pretty much showed that. Okay, so now we've got the relative strength chart of the Nasdaq percentage of stocks above the 50 moving average to the percentage of stocks above the 200. So we've these red circles show in overbought levels what happens, and we're in a strong uptrend. It doesn't pick it quite as well, as those blue circles, rectangles I should say, show, but just another chart to look out for. Okay, same as what's this one? The McClellan again. I've used this. I've charted this a little bit differently, but it says pretty much the same sort of thing. We've got the percentage of stocks above the 50-day moving average. Similar thing. These blue rectangles again show times where it doesn't work very well, but other than that, this chart works fairly well at picking tops. And right now we're in top territory with negative divergence. Okay, we've got the same chart. We'll just show it with a couple of moving averages to show we just crossed with a negative divergence. We've got here we've got the VIX relative strength chart, and it's been hanging up here for quite some time, which doesn't typically do, not for this long, but again it's pulled back out of overbought, so that's showing not a good time to buy right now. Okay, now these are the relative strength charts. I haven't got a lot of them, but I just want to do a few because they haven't all turned down, but a lot of them have. And that's why these are just confirming. Oh, by the way, I probably should have mentioned that a lot of these last charts that I just showed are actually, they're not daily charts, they're weekly charts. They're intermediate term charts which they're more intermediate positions. So these from here, all these ones that I showed on the latter stage, they're all weekly charts. Okay, so that doesn't mean that it's going to take months to get back down here. It just take a couple of weeks, few weeks, possibly a month, but it's going to take, the intermediate charts are saying that we've got probably an intermediate move down, which could just be a couple of weeks, but we'll soon find out. So yeah, so the okay, so it's just a few relative strength charts. I've got the 10-year Treasury to the 30-year Treasury relative strength chart. Each time you see the red circles, each time this price falls, and my moving averages cross, it's below the 30-week moving average. Then we've got a downtrend, and typically, as you can see, we have down moves in the market. Okay, it picks it really well, and right now it's been breaking down as the market's been going up. So that's telling, and right now it's actually broken a new low, so that's pretty telling. Same as the Australian dollar to the Japanese yen, a relative strength chart. It's been breaking down this whole time. Same here in this last run up from February. This is broken down, which that's pretty bearish. As you can see, each time the red circle, each time it breaks down, we get nice pullbacks in the market, intermediate pullbacks, which is what we have now. Same as the what do we get? The financial sector to the utilities. Utilities is a defensive sector, and right now it's breaking down again. This is a weekly chart, so these are all intermediate term charts. Okay, so breaking down, and each time you see it's broken down, we get good intermediate down moves. These are just daily charts, these last two. We've got the SPY to the TLT. Okay, I just wanted to show this because it's just about to break out of this triangle, and if and when it breaks down, then it could have a pretty quick move down to the bottom, which will drag the market down with it. Same with the what have we got, junk and TLT. Right now we've got lower lows, and we've got a lower high. It looks like it's already broken. If that continues to break down, then that will possibly go down maybe to one of these two lows, which will drag the market down with it. These are only daily charts, but still we're talking in moves of potentially a couple of months, if not more. But I'll keep track of these charts, show you in the future, but I know I went through them fast, but there's charts that you should keep an eye on. So stay safe in the market, guys. I hope this wasn't as long as normal, and just trade at your own risk. I'm just showing you things that I see, so do your due diligence, and I'll talk to you soon. Thanks, guys.